SPDas. Trading floor is yours.
Good afternoon, I would say, and welcome back everyone for the London Open from the eastern side, and good morning on the western side. So let's get started off with the Euro USD hourly chart. As we were discussing in the Tokyo Sydney overlap, the price action has dropped about 100 pips more than what we were expecting, uh, around the 1.03. That's a 61.8% mark. It just that's a noise which has caused it to drop possibly. The good thing is we are still holding above 1.0175, and till the time we stay above that mark, structurally nothing really changes. It is just the larger degree wave one, that is 1, 2, 3, 4, and 5, followed by an A, B, C decline. So we've got the larger degree wave one of one larger degree, that's a minute degree, and then potential wave two of a minute degree as well. Uh, there is a sideways, some sort of sideways activity which can be seen here, possibly a triangle. So I would not be surprised if price action actually drops one last time, maybe bit marginally before picking up on the north side again. All right, a marginal drop, or that has already happened. I was watching it on a 15 minutes time frame as well before that rally resumes. Now, what confirms that bottom is in place? One thing is the counts. The second thing may be there would be a bullish divergence on the RSI with prices just testing that low in the next few hours or so. Because as far as the time is concerned, this is the first trading day of the month actually. Officially, though the date is 3rd Feb, but trading day of the month is 1st. And the last couple of days of a series and combined with the beginning of the month is where we see major tops and bottoms carved. So it should be either today or possibly early tomorrow, maybe Tokyo Sydney overlap. But if what we have done structurally is correct and if it is going to hold, then bulls are going to be fiercely back again. And that is the trade we have taken. 260 longs again around the 1.0100 stop with a 750 potential target going forward. All right, so nothing structurally changes for Euro USD right now. Let's get back to the dollar index. I'm not able to, yes, 8 cap is here. So we've already done the stuff the last session. What we are now looking is again that 88% wave 2 doesn't change structurally anything. We've got a neat little 5 waves, 1, 2, 3, 4, and 5, followed by a corrective wave A, B, and wave C. No doubt it has jumped off, and we were not expecting this kind of magnitude for the C wave. Uh, but what has happened has happened. Instead of 61.8%, we have touched 88%. And the good thing is that we are testing the backside of the trend line right now. I think that was in the 4-hour chart, which we had placed the last session, I suppose. Yeah, as you can see, that backside of the trend line is being tested neatly. If a reversal needs to be carved, it's an ideal place for the reversal to happen here. That's backside test of the support trend line, which should be acting as a strong resistance. Just for the sake of see, it's not a trend line actually, but if this structure holds, then that is the trend line which will be followed going forward. That's a downtrend line which will be followed going forward. All right, so back to the hourly chart once again. Wave 1 of a minute degree in place. There you go. Followed by wave 2 of a minute degree in place as well, around 109.50 zone. It's around 77, but that's fine. We've taken shots again around 40 with a stop loss around 110.30 and potential target at 105. So the trade remains, and it's about the positional traders who should be taking trades right now. Also, intraday short-term traders are good to go short uh, at current price as well. It's just about 5 points higher. All right, so Euro USD structurally long and dollar index structurally short. As we count waves, it is a C wave subdivided into 5 waves, so it's a diagonal. That is not a diagonal, it's an impulse now. So we've got wave 1, wave 2, that is wave 3, maybe wave 4 sideways is going on before one more shows higher, and that will be it. Or wave 4 is already taken into account with that small noise early morning, and then we've already got that wave 5. Let me just check the Fibonacci extension. So simply Fibonacci extension. There you are, it's 1.27. It's coming around 109.92. So I would be prepared for a last touch around 109.92. There is a sort of convergence. Not, I wouldn't say exactly, but you know what? Price action has already tested 83, so it's not necessary it should go and test 90 mark, but just in case, let's be prepared for that one last test before a reversal happens. All right. I think the same applies for euro as well. Let me have an extension of wave 1. So euro is pointing towards, but you see 1.27. Now this is a good convergence which is seen on the charts around that 1.02 5 500, 1.022125 region, where prices are actually stagnating and stagnating. They are stagnant right now, and could be possible sideways going on, but that's a good convergence from where price action should reverse. Maybe in the next few hours, by the time we are back in the New York live, I'll keep the Fibonacci extensions as it is. All right, so long euro again, short dollar index again, and time for us to look into gold. The Asia session was absolute volatile for the metal. The price action dropping fiercely lower towards the 70 mark. If you count, okay, let's because we had a technical issue while we were discussing gold. Okay, that's the bigger picture which we were discussing last time, and minute ABC is what is underway now. I'm really sorry, I need to change the color. So it's minute, and then minute forms a minor. All right, that's why the circle is required. So if we go by the structure and if the reversal has, if top is in place, then ideally we should be seeing prices dropping lower below that 2586 mark technically. A print below 2580 is technically enough for the pattern to complete. But you never know, it can actually go produce an elongated wave as well. All right. Now, what I was thinking was, I was wanting to take you guys to the daily chart for a second. Let's flip it to the candlestick pattern and let's zoom. Now, the kind of pattern or signal which is expected to unfold as we speak, or maybe by the end of the day, is a potential evening star. If you look at the Friday candle, that was that was almost a pin bar. It's actually a pin bar. A pin bar is not a signal actually; it's a half signal, but it's a tradable signal in an aggressive way, which is potentially indicating a turn ahead. After a long rally, when you see a pin bar appearing, it is an indication of a potential trend lower, possibly. Okay. Now, on the hourly chart, if we look at, there is already 5 wave decline. If you can see, let me, because when you want to see the waves, then the bars are quite clear. We've got wave 1, 2, 3, 4, and 5. The fifth wave was extended. If that is correctly done, and if it's a corrective wave higher, we can only take a 61 of Fibonacci retracement and extension to find out what lies ahead. So the shorts taken on Friday around the 28:10 mark, profit booking was suggested last session, and now price action is expected to drop lower towards 27:30, or that's the support which should be taken out by the bears if they are back in control. You need to see if bears are back in control, you'll be seeing a sequence of lower lows and lower highs being print. Correct? Something like this could be in cards, on cards. And let's keep this as it is, and let's come back. It's not going to happen today, but it could possibly, because the daily chart needs an evening star to confirm a potential reversal. And if you look at that, let's count. I mean, high was at 17, the drop was almost 72, so 82, 92, 102, 12, that is 45. It's already dropped 45 points with a 60% retracement back towards 2800. And the next step should be around 1.618 target, or 0.618 to be the first one. All right, so we are holding short positions, continue to hold short positions with potential near-term target as 2730 and stop loss just above that high. We are not changing anything, 2820. All right, sir. Now let's have a look at the Bitcoin and the coins first. And when we are back in the NY, we take up equities as well. Now, if you look at the coin, or the the major of the coin, that is Bitcoin, we were waiting the entire last week, and now we have got an entry. But you know what? That it's something which could which could be quite. I'm quite skeptical about uh, a new rally which could possibly resume from here. Because okay, it's a WXY as we were talking last time, WX and Y, but you know what, the stop loss that we recommend is around 89K. It's almost 88% retracement complete, and it's still we don't see an impulse wave. So it's a tentative buy for me right now. If you have not taken any position, then you might want to wait. You might want to refrain committing on the long side. We want to see an impulse first on the hourly chart, which is still absent. That's a corrective wave. At least now it's a corrective wave. All right. We need to see an impulse before we can commit further. So fresh trades should be avoided. You never know, a major top could be in place, and if that's the case, then you know what, uh, bears are just setting up for a major wave low from here. All right. Technically, it could still be wave one and two of the lower degree, but we would like to wait for further confirmation. At least an impulse on the hourly chart. Once we see an impulse, we are at least sure about one more five wave higher, and then it's easy to commit on the long side. All right. I think Ethereum we should be staying away for a while, as suggested. We should be waiting for a while before before doing anything here, because if you remember, quite almost all the sessions that we were doing last week, which were structurally maybe one more high towards 43 could be left, but always it was communicated that please move your stop to a break even or just log profits. Hadn't we done that, if we didn't do that at 3200, we would have been doomed, right? So even if we had kept the stop at 2029, it would have been a loss. But right now, at least we are not in a loss. We can always take time to study what structure is unfolding. I don't see a real panic situation right now. There could be a larger degree wave 4 in the making. The entire structure could be a larger degree wave 4 in the making. And if that's the case, then we are still possibly one more high before it resumes to turn lower again. All right. So just please let's wait for a couple of more sessions before deciding what to do with the coins, whether it should be long or should be a sell on rally. Solana, I think it's the same case. Mostly ideal or copy like a Bitcoin, where we have gotten on the long side from 220, the stop around 179. But as I said, it is better to wait to take fresh longs if you are wanting to. And it is a 3-3-5 structure kind of confirmation, so that's still a corrective drop. But we need to see a rally materializing from the bottom, which could turn around an impulse. So there's nothing wrong in accepting the fact that we should wait until the structure is clear and then commit ourselves on the long side again, brothers. All right. I would stay away from Ripple for now. Okay, the structure in Ripple is still interesting in the sense, if we start counting waves from here, that is the first wave, wave 2, and then 1 of 3, 2 of 3, or that's 1 of 3, A, B, C, 2 of 3, that could be 3 of 3, 4 of 3, and 5 of 3. That is wave 3. That entire 5 waves is wave 3, which could, what it tells us is, okay, let me plot the waves here. So if that is wave 3, it could be wave 4 now. And possibly another high towards wave 5. But rather than getting it on a hasty level, we could do that at a slightly, because if that's an impulse, which looks like, then there would be a corrective decline, and we would enter buying at that price somewhere around the 2.01, and stop below 1.76, and we'll take forward. But I think we triggered the entry and stop both in in uh, in Ripple. We got it at 3.01. We got out at 2.9. That was quite unfortunate. But it's the way it is. Had we not placed the stop loss, it would have been even worse sometimes. All right. So we will be watching a corrective drop and then initiating longs in the Ripple going forward. All right. So let's bring it a pause here. And once again, thank you for watching. We should be more clear in a couple of sessions as to how the coins would behave as the February series unfolds. And I'll be handing it over to Igor. Igor, back to you, brother.
Thank you, SPDas. Always a pleasure and always
Thank,
humbled by your research and experience.
thank you. Thank you so much.
ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. ForexLens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with ForexLens. Check out our performance at ForexLens.com. Get the edge on trades. Your eye into the markets. ForexLens.com.